All right, welcome back to this week's live stream. This is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stocks today. In today's live stream, just like always, we'll go through, take a look at the indexes, how they're holding up, the QQQs, SPY, IWO, and RKK. From there, take a look at how the leading stocks are holding up. We've had a lot of earnings today after the bell that did not do so well. There's that big crypto news with Bitcoin, Ethereum, all those flushing lower today. So we're back on to like a risk-off environment. And then second half of the video, just taking a look at what stocks are holding up the best for potential long setups and a few potential short setups as well. Along the way, if you have any trading questions, drop them in the comment section. I have them up right here so I can see what you guys are saying. Or if you have any chart requests to go over, we could do that as well. Now that we've hit daylight savings, I'm in Arizona. We don't do daylight savings, so the market opens at 7:30 now instead of 6:30 in the morning, which I'm super happy about. But we're going to be starting these live streams a half hour earlier. Typically, we start them at 7 Central. We're going to be starting them at 6:30 Central going forward, just because I have swim practice at 7 later on. So let's take a look at the action. Very, very volatile action these last couple days. That's to be expected. We have the elections today. CPI print on Thursday before the market opens. That seems to be like the largest news. With the election, I don't think much is going to drive the market in either direction. We know historically that split Senate and House does the best for the market, but I don't put too much weight into any of that stuff. But it will create more volatility with the market, and that's why coming into today, I only had one position on. It was a short on Tesla. We'll cover that in a little bit, but really not trying to do anything, not trying to do too much before the CPI print on Thursday morning. That's really going to tell us whether we're in a risk-on or risk-off environment. Things under the surface are shifting pretty drastically, or not drastically, but what's a good way to say this? We're getting mixed signals under the surface. So taking a look at SPY, we recovered the 50-day moving average after last week's sell-off with the Fed. We took out the 8, the 21, and the 50-day moving average, closing back above all of those. We did so on lighter than average volume these past 2 days in this week, and we're still well below a declining 200-day simple moving average. So if the low is in the market, there's still going to be plenty of time to get situated before we want to trade on the long side. Taking a look at the QQQs, today ran all the way up to the 21 EMA before getting rejected. This was up about 2% in the beginning part of the day. Then we had the kind of crypto crash that brought this back down. I think it was like minus 4% or 0.4% at one point. And we still closed up 0.7%, back above the 8-day EMA, but still below the 21 EMA. The QQQs aren't handling the market as well as SPY. That's because the large liquid leaders, large liquid stocks like Meta, Google, Amazon, they're all right near their 52-week lows, while energy as a group has been holding up really well. And SPY is more energy dominant, where QQQs are more heavily weighted with the kind of FANG stocks. Taking a look at IWO, this continues to show relative strength compared to the other two indexes or other two ETFs, which as a swing trader, this is positive to see because most of my trades will typically align with growth stocks, either to the long side or the short side. And the fact that this put in its low in June, put in a higher low as the indexes made lower lows, good sign of relative strength, and then put in another higher low as the indexes also put in a higher low at this point. But you see we get rejected at the 200-day twice now, so until we get above that 200-day moving average, we're still just don't want to get too aggressive in the market, don't want to have too high of expectations. Much of the trading this year that has been that would have been the most profitable is selling quickly into strength right away and then just turning your edge over in the markets. But the fact that IWO is holding up better than SPY and QQQ, I view it as a positive, but we can't have that divergence holding forever. And then RK, I put IWO out there because I want to track growth stocks, and then I also always look at ARKK because I want to see how the growth stocks typically in stage 4 declines are doing. So if we get a rally in the indexes and ARKK is outperforming the indexes, well, then I know it's more of an oversold bounce or short covering rally in the most beaten up growth names that aren't likely to become market leaders in the next bull cycle. So ARKK is a really good kind of just reflection of how are the poor stocks doing in the market. Are those the ones railing? If so, then for my strategy, I can't get too aggressive on the long side. But thankfully, we're seeing divergence with where ARKK is basically near all-time low, or not all-time lows, but pre-COVID lows. Above average volume selling off. This kind of is correlating with Tesla putting in new lows for the year. I know they're pretty heavily weighted with Tesla. So as long as ARKK stays down, IWO stays up, and then the indexes continue to either chop sideways, we're going to get a market environment where the strongest stocks have more time to signal that they're the strongest stocks in the market by either putting in higher highs while the indexes are putting in lower highs on pullbacks. But then we'll also see what are the weakest stocks in the market that are potential shorts if CPI comes in hotter than expected on Thursday and the market flushes. So the more chop that we can go by, or we can survive, and I would survive it by sitting in cash during this very volatile news-driven week, the better. It's going to give us a more clear picture of the stocks and the groups of stocks that we want to be focusing on, both on the long side and the short side. So hopefully that makes sense. We covered those ETFs really quickly. Last time I took way too long with the leaders, so I'm going to do this relatively quickly, especially because I posted on my Twitter account anyway, just Nick Drendel on Twitter. Hey John, I appreciate the comment. Thanks for the support. AEHR semiconductor stock pulled back into the previous base's resistance area right by 1770. Buyer stepped in even though we undercut the 21 EMA. And then we've had 4 really nice days right through the 21, the 8-day EMA, and close to the previous highs up here. Still no low risk entry point on this name. So while it holds up super well, it's not a stock that I've found a way to weasel in and actually make money from. But it is, when I see this stock holding up, that gives me a little bit more confidence in the market. CCRN, another stock that's super choppy to trade. I haven't traded it in 2022. Had a really tough day last Friday, down 11.6%. Many of the leading stocks, we got divergence last Friday, but instead of the leading stocks holding up better and the indexes rolling down, the indexes were actually up about 1%, while many of the leaders got hit pretty hard. And CCRN down 11.6%, closing under the 8 and 21 EMAs. Now this looks like a bear flag into the 21 EMA. Maybe this is just the left side of the base and we base out here, but not looking to trade this in either direction at this point. Celsius, not much to say, has earnings tomorrow. The only reason why this is still on the watch list or the leader list is because super strong earnings per share, super strong sales, after-tax profit margins. We have this giant cup handle here, or basically a second base, and we'll see how earnings go. So we don't want to predict, we want to react to the market, and that's what we'll do with Celsius. The 2 solar stocks are kind of diverging from each other. ENPH, not as strong, broke under the 50-day moving average on Friday, was down, 4.6%, breaking under the 50-day moving average. Monday, the high of the day was right at the 50, then we closed lower. Today, mini rally, less than average volume, didn't clear the 50-day moving average. So this is showing some weakness, but for solar, it went into all-time highs last week, I think on Thursday, and then pulled back to the 8-day EMA yesterday. Inside candle today, still basically closing flat today, which is positive. If this can continue to build out just on around the 145 area, the previous area of resistance here, that's positive. We've also had like SEDG, this was up 19% today on above average volume, another solar name popping. The 50-day moving average even though earnings were minus 37%, sales up 59%. Positive reaction to earnings, and that's what we want to see. ARRY also had earnings, another solar name, up 14.2% after hours. So that's going to get it back above the 50-day moving average, and we'll see how this works on the right side of the base there. But a couple reasons to be bullish in solar. It's just end phase giving us reason to pause, or at least be not all in on the solar group. It seemed like ENPH was collecting all the like CanSlim money in the market. So as we had the indexes roll down when was it, Wednesday, Thursday, whenever the Fed speech was, it seemed like this was where a lot of the CanSlim money was, with the strong earnings, strong group, all that stuff. And with those guys leaving the market, I mean, myself included, I was in this and sold. I think this is just reacting a little bit more volatile to that. So not a destroyed chart by any means, but also not the name that I would want to be focusing on in the group at this point. EXTR, not doing anything wrong. New highs today. Super strong action there. Computer networking group, 15th out of 197. Let's see. New stock added to the list is GFS. This is a semiconductor stock. That group is still pretty weak with NVIDIA. I mean, coming off the lows above the 50-day moving average, which is nice. But GFS, IPO leader, potentially putting in an inverse head and shoulders with this like IPO base. Nice move today. Earnings up over 1,000%. Sales up 22%. After-tax profit margins 17% improvement. We blast through $60 on above average volume today. Not overwhelming volume, but closed over 60, which is nice to see. Let's see how this works out. Not on the leadership list. I took this off after their earnings, but ON Semiconductor stock also recaptured the 50-day moving average yesterday and had higher highs, higher lows today, up 2.4% on less than average volume, but still a name that's showing relative strength in the semiconductor group. That's not AMD and NVIDIA. Let's just stick with semiconductors. We got PI. This is a stock that I will be monitoring as a watchlist name in the second half of this week. Held up relatively well. Earnings a couple weeks ago, 950% earnings per share growth, 51% sales growth. This has been on the breakout watch list the past 2 weeks, but just kind of pulling back a little bit as the market pulled back. Closed under the 8-day EMA today, but still acting relatively normal. If this even pulls back to 100 and just sits on the previous highs here, that wouldn't be the worst thing in the world, and we could get a lower entry point there. And keep our risk around the 21 EMA. So for this setup, I'm hoping that the market does sell off a little bit more so it has an excuse to pull back, to sit on top of that previous base and $100 and the 21 EMA. So you can hope for different things or just like plan for different things given whatever the market does. And that's more, we're planning to react, but we're not jumping in hoping that the market does X, Y, and Z. We have plans of attack if the market does X, if the market does Y, if the market does Z, if that makes sense. Let's see, HLIT, bad day last Wednesday, breaking under the 8 and 21 EMA. Had a bounce back day and now is coming back under those areas. Really nice move, like from 10 up to $16. So if this just kind of is the left side of the base and then we base out, find support at the 50-day moving average, that's fine, but I don't want to be trading that at this point. Little too sharp of a distribution candle here. I haven't had much success with trades like that, like buying a pullback after a big distribution candle like that. It's not usually, especially in this market, not something that I want to deal with. RYTM, I think they had earnings today, up 2.5%. The 8, the 21, the 50-day moving average are all just above price. So we'll see if we can pop over that and then get into an uptrend. And then last two ones. SGML, this is actually a theme that I want to be focusing on. I posted this on Twitter yesterday, but lithium stocks were all setting up today. And unfortunately, I couldn't take advantage of that with a couple trades. Had a vet visit in the morning. Found out my dog tore her ACL, which is horrible news. But what are you going to do? Got to get her better. So SGML, this is a lithium stock. IPO, just a monster, from $10 or $13 to $40 in a short period of time. With this pullback, I kind of want this to give it a little bit more time to base out. I mean, from 13 to 40, 200% gain in very short period of time. I would just want to see either tighter action where I can place a 3% stop loss and then have really good asymmetrical risk reward, not have to nail it the first attempt, but if I can use a 3% stop once, twice, 3 times, and then on the third time eventually get that true breakout, that would be better. But these daily bars are still pretty wide, and while we're holding closes over the 21 EMA, which is very constructive, I haven't found a lower risk entry point in this name. The stock that I was really focused on, or was going to be focused on today, was LTHM, because this setup kind of similarly to what we've been seeing working most recently, where the stock that was at previous highs quickly undercuts the 50-day moving average. You have an oversold bounce back over the 50, but that can't hold. So you pull back, put in a higher low, and then that second time you pop the 50-day moving average after putting in a higher low on the pullback, that is a nice entry point, and this was right around $31 as a nice entry point. We saw that with CPRX earlier. Quick, swift break under the 50-day, popped over the 50-day, couldn't hold it, and then eventually as you broke over it, 1343, that was a nice trade to the upside. I think CLFD was another one. Quick under the 50-day moving average, rally over it just by a few, but couldn't hold, pulled back, consolidated underneath, and then had a nice move from 105 to 120, a tradable rally from that area. SWAV, similar action before breaking down. You break through the 50-day. This was a little bit worse action because it was on above average volume, but for your first rally over the 50, can't hold, you build under, and then you had a nice like 15% pop to trade with that. So that structure of a trade is what what I was looking at, not that LTHM. When you do have group strength and when you do have the general market behind you on that day, it does usually lead to a nice move. And this was up 6% that day. The other lithium stock, more like wild action, but was consolidating right at the 50 and the 200-day moving average and popped that today. So this lithium group is one just to keep a pulse on. It's something that we saw positive action today, and we'll see if that continues in the future. All right, now we will get into the rest of the stocks on my watch list for the second half of the week. Again, with the CPI numbers coming out Thursday before the market opens, I'm not planning on putting on a bunch of exposure tomorrow to kind of predict what the CPI is going to do. Exposure, I mean, I'm not going to be shorting a bunch of stocks. I'm not going to be going long a bunch of stocks tomorrow. The only trade I've made this week actually has been shorting Tesla. So these are very much watch list stocks. We'll see how the market reacts to CPI numbers on Thursday morning. But ARCH, Coal Group, a couple other names, AMR, BTU had a really nice day yesterday. This was on the breakout watch list. I think this was up 11% yesterday, right up to $30. Inside candle, nice consolidation there. CEIX, kind of doing, actually, yeah, similar action where you undercut the 50, can't hold the first move, build under, and then pop it. Let's see if that 50-day moving average holds, but that group is still something that I want to keep a tab on. 3 really tight closes right at 160 or right above 160, so we'll see if we can push out from this area second half of this week. ARIS, this is pollution control, and within this group, a couple of other names are setting up relatively well. Now this one lifted over the 200-day moving average, pulled back to the 8, consolidated, and then today's move over like $17 was like the area that I was watching. But HDSN, same within the group, just came up right back to all-time highs. So now we know that group is actually collecting some money. Let's see if we can find a low-risk setup within the group to potentially trade. And I think ARIS is that. So we'll see how this holds up. This type of price action, given how volatile the market has been, is pretty constructive. So we'll see. CAR, this was on the breakout watch list as well. Not doing anything bad, kind of an inside candle today. Very, very little volume Friday, Monday, and Tuesday this past week. Just looking for a break over yesterday's high, 241.28 as a potential entry point there. Really strong earnings and strong sales. Earnings up 102, sales up 18%, after-tax profit margins up 29%. So the tighter the price action and the lower the volume gets as we get into a potential expansion of price, the more powerful that price expansion is going to be. Now, do we know for a fact that it's going to expand to the upside? No, we don't. Even if it starts to expand to the upside, we still have to put a stop loss in so we can manage our downside risk. I can't say it enough. You always have to use a stop loss because we're not trying to make all of our money in our life on one trade. We're not going all in. We want to be doing this over 5, 10, 15, 20 years. The only way to be consistent over that period of time is to really, really focus on risk management. So even though this looks like a nice setup, it can immediately break the pivot, cause you to buy, and then flush lower. It can do that. You have to be prepared for that and not take it personally if that happens. Yeah, Stacy, we were looking at the same names. ARIS, really nice action here. So we'll see if we can, ideally if this opens lower, I know it's up after hours. I think that's just because it does trade relatively light, less than 300,000 shares traded. So if liquidity is an issue when you're trading, this might be one to avoid for that. Maybe focus on HDSM. Slightly, I mean, that's just as liquid too, but. HRMY, one that made new highs this past week. Nice consolidation above the 8-day EMA. A little bit more wouldn't hurt. If we can pull back to the 8-day EMA again, that's an area where I would want to focus on. But biotech group continues to act relatively well, at least stocks within the biotech group. You're always going to find a couple biotech stocks setting up because they do tend to trade on their own accord. NTNX, this is a stock that I owned last week. I bought at 27, breaking over the high from the 28th. $27, I mean, I bought at 27. Nice 2-day move, sold into that. Since then, markets pulled back. This has pulled back, but hasn't tested the 21 EMA just yet. Nice, calm and controlled action, pulling back. Less than average volume as we do so. So this is just looking for a break over today's high, 27.04, called $27, potential entry point there. Earnings in 22 days, not too close to trade. High from Malaysia, that's awesome. Whenever people come to the live stream, not from the US, it's always kind of cool to see. So hello from Arizona. All right, let's see. OXY, this had earnings, I think after the bell today, or maybe today before the market opened. I'm not sure, but energy stocks, oil and gas stocks, something that we want to keep focus of. Inside candle today on below average volume. I think earnings was after the bell. Correct me if I'm wrong in the chat, but only down 0.5% after hours. This is one where maybe it shakes out right at the open with earnings and then takes out the previous high here. So just looking at yesterday's high, 76.11 as a potential entry point for OXY. PCVX, this is my favorite setup going into the second half of the week. This was my pick on the Wolf Financials Twitter space on Monday that I always do. Really nice action, above 100% move in less than 8 weeks, so qualifies for the high tight flag setup that we haven't seen much of in 2022. Really nice power coming in here, lots of volume. And then as the market's pulled back, and after this has already moved 100%, it's only pulled back from $46 down to $42. So about a 10%, maybe a little bit more consolidation there. Hasn't tested the 8-day EMA just yet, but really nice action. Looking for a break over today's high as that potential entry point. More sideways action would be preferred here, especially if we can get another very quiet day tomorrow. And then we're trading Thursday after the CPI already comes out, so there's less volatility, and we can kind of trade on less news-driven events. I hate trading around news-driven events. It's the most frustrating thing, so I tend just not to do it. So if we can have another quiet day on this tomorrow and then break out on Thursday, that would be perfect. And that's where I would actually like trade it with a little bit more size. Also a biotech stock, so it does have gap down risk. You can't, when I say I want to trade it with a little bit more size, I mean more intraday move where I would get in, I would sell a piece at the end of the day because there's still that gap down risk with biotechs, and I don't want to have like 40% of my portfolio on a biotech that goes down 80% after hours randomly. That's too much risk for me. So when I'm trading these biotech stocks, I really want to like get in and immediately have a profit and sell a portion into strength. So I'm not carrying too much position size overnight on these, if that makes sense. Couple other ones. We already covered PI, something that we want to keep an eye on, semiconductor stock, but SMCI, this is one that had earnings last week, 490% earnings per share growth. Sales up 79%, after-tax profit margins improving there. Let's take a look within the group because I think, yeah. So within the group of 13 stocks, this is number 1 on earnings per share, 1 on relative strength, 2 on accumulation distribution, meaning heavy volume days have come on up days. Low volume days are usually on pullback days. That's the right volume pattern that we look for in a stock being accumulated. And overall composite rating, number 1 out of 13. So while this isn't a very strong group, the computer hardware, 122 out of 197, within the group, this is the dominant stock. Moved up on earnings, 480% the average daily volume. Since then, still hasn't tested the 8-day EMA. Did kind of pull back and just sit on the previous highs here. So all constructive action right there. And then the last 2 days, very quiet price action compared to the indexes. Now, this is still probably, let's see, from 80 down to 77. So what is that? Like 4% range. But compared to a move that popped up 12.5% into new highs, something that we want to keep track of here. We'll see how this handles a test of $80 to the upside. STNG, I think this group is also setting up again. So the oil and gas transportation pipelines, those stocks have been on fire in 2022, and they're starting to firm up a little bit again. I might be a day or two too early on this, but STNG, we can take a couple other looks at the stocks in the group. Let's rank this by relative strength rating. But LPG, this is extended, needs to pull back. GLOP, nice little pullback. STNG, I think this is the best setup in the group. It is a little extended from the 8-day. It has some air that you could see there. But double inside candle from Friday to Monday to today. So nice clean entry point with a break over today's high. Let's bring up those other stocks, because I think there was one other that was holding up pretty well. ASC, this is one that tends to lead the group out to the upside, has moved from $3 up to $14 this year. GLNG, another one that, here, earnings in 8 days, but nice pivot around 28.44, 28.45. Doesn't have to be exact there. You get the point. So a lot of stocks in this group are starting to tighten up and firm up. So maybe ready for another launch higher. That's that oil and gas transportation pipeline with STNG as the stock. One more biotech stock, UTHR, earnings last week, up 18%, sales up 16% year over year, after-tax profit margins 46% improvement. Popped over 260, has pulled back to that area. The low of the day today was 260.24. So let's see how 260 holds on market weakness. Another situation where if the market is extremely weak and this pulls back on top of the previous base at 245, that wouldn't be the worst thing in the world, but we would be looking to trade this in maybe like a week or two as it pulls back, finds support at the 21 EMA and on top of the previous base before moving higher. So maybe a little bit early to trade this, but putting this on your guys' radars, maybe in a week or two that we want to cover this. And then, so those were all the stocks on the long side that I'm keeping track of. On the short side, it's a lot of the big cap stocks that are performing the weakest. AMZN, Amazon, no rally attempt with the indexes. So if we go to QQQ, we've at least had 3 days positive action, rallying back up to the 21 EMA. So if we're looking for stocks to short, what stocks have only rallied to the 8-day EMA? What stocks haven't tested the 21? What stocks are rallying on below average volume or very light volume where it's more short covering or just retail buying the dip? And that's stocks like AMZN, Amazon, almost made a new low today. So extremely weak, hasn't even tested the 8-day EMA. If the market rolls over, this is, it's got nothing. So looking for just a break into new lows is a potential short. Or if we get, again, perfect market environment for this setup would be if the market just rallies again and then we get a low risk or low volume rally up to 95, then we can manage our stop loss around 95, or our entry around 95, our stop loss around 100, and then probably have better risk reward on a trade like that. Tesla, I mentioned earlier, this is the only position I'm in right now. It's a 10% short position. Started it, well, I've kind of pieced in and out of this. So I started it on the CPI data day, or not CPI, the Fed day, where this rallied along with all the other stocks right at first when the Fed announced their 75 basis point interest rate, but it never went green and it never broke over the 21 EMA. So at that point I had about 45, 50% long exposure on. So I took this short as a hedge. And it happened to work out pretty well. It just continued to roll to the downside. And then I closed that with all my longs and then basically restarted it as a short as it took out Friday's low in anticipation of breaking under $200. And we did so, closed under that, down 5% yesterday on above average volume, down another 3% today on above average volume. And this is while the indexes were up. QQQ was up 1.1% yesterday, 0.7% today, 1.6% on Friday of last week, and Tesla is just not rallying at all. Very, very weak, above average volume pouring out of the name. If we look to the weekly chart, there's not too much support before we get to the previous kind of like base breakout at 150. 152 area. So this is one where if we do get a weak volume rally back into 200, I'll probably look to add more exposure to the short side on this name. Chewy just has the 8 to 21 EMAs above price along with the 50-day or 200-day moving average. If we break below today's low, that would also be below the 50-day moving average as well. The last higher volume day was a down day in the market or in the stock, and that was actually an up day in the market. So we're seeing relative weakness. That's exactly what we're looking for when we're shorting a stock. So this could be a potential short. DLO earnings in 6 days, so might be a little bit too close to play that, but just looking for a break under $20. DocuSign, very, very weak. When it's hard to see the charts on MarketSmith, those tend to be pretty good short opportunities. Like if we look at Carvana, you can't even see the price. Man, this chart is, it's wild. You should print this out and promise yourself to never hold a stock in a stage 4 downtrend, and you'll do much, much better as traders. Let's see what else. Meta, another large cap that rallied up to the 8-day EMA, nowhere near the 21 EMA like the indexes are, so signs of weakness there. Down today as the indexes were up a little bit, just looking for a break under today's low as a short opportunity. SoFi, another growth name that had earnings, was up I think 18% or something at the high here, right into overhead resistance. Sellers stepped in. You got the people that are trapped at higher prices selling for break even. You got the people that bought at $5 that were then up, what would that be? Like 30%, is that right? 6.5 divided by 5? I think that's right. About 30% selling for profit. and you just got a quick squat on that day, further moved down back through the 50, the 8, the 21 EMA, down 11% the next day. Still has not been able to reclaim the 50-day and down 1.5% today. Looking for a break under 5 as a potential short there. Spotify, nowhere near the 21 EMA. Low volume, just sideways action so far. And then ZIM, earnings in 8 days, so maybe that's too close. Probably is too close. I'll probably take that off, actually. And this is above the 21 EMA, so let me take this one off of your guys' radar. But all right, those are all the stocks that I had to cover on today's live stream, so let's go to the chat. If you guys have other charts or trading questions that you want me to go over, drop them in the chat, and we'll get to all of them because we still got 25 minutes to go. So plenty of time to talk any type of trading questions or just more chart requests. So we see from Mar, ARRY had a nice earnings day, and AEHR trade was awesome. Yeah, nice moves out of both of those. I'm always like, people think that when I talk about stocks that are in major downtrends, like I would like to see more of that. I would not. I would much rather have more stocks working on the right side of their bases, jumping up on earnings versus all the breakdowns on earnings that we saw today. I mean, today it was, I guess I didn't comb through every single earnings report, but everyone that I looked at, except for ARRY, were negative. We had Upstart down 24% after hours today. It was already a stock that was down 95% from its all-time highs, down another 24%. Don't hold stocks in stage 4 downtrends. Lemonade, working in the insurance industry, I'm kind of happy that this is failing, but down 9%, or actually, oh, maybe not. They were down 9% after hours at one point. Maybe they're back up. Maybe I spoke too soon there. What were some other ones? Lucid, they were down 9% last time I checked. Yeah, down 9.6%. Disney down 6.9% now, down to $93, right around their previous lows. Still a stock under a declining 200-day moving average. No reason to get involved when the price is under a declining 200-day. We're fighting to swim against the trend. If you're doing that, there's better stocks, better opportunities in the market, higher probability odds. We just don't want to be involved at that point. What was the other one? Oh, the other buy now, pay later. Looking back at that, like, I'm kind of like mad at myself because I never understood the concept of buy now, pay later, how it was any different than a credit card, just with higher interest rates, like, or higher risk of default because you didn't have those higher interest rates right at first. And it should have been an obvious short like the entire time. So I'm kind of kicking myself that I haven't made as much money shorting this stock as I could have, but down another 16% after hours. Between this and Upstart, which one is going to hit single digits first? Probably AFRM. We'll see. And then I think AMC had earnings today too, down 4.4%. Another just gross looking chart there. VLO, Sarah, let's take a look. And you are from Dallas. Hello. Yeah, VLO, a lot of energy stocks are shaping up pretty well, and it's still holding great relative strength. Earnings already done with, so we don't have to worry about that. Earnings up 437%, sales up 51%, after-tax profit margin improvement 6%. Excuse me. Nice. I mean, this is beautiful. Beautiful tight price action. Riding that 8-day EMA higher. Nice clean pivot. Right at 133. Let's see. I don't have a pen next to me. I should have a pen. I'm going to add this to my watch list as well. So thanks for pointing this out, Sarah. This is definitely one that I want to keep track of. What was the other one you said? XME. Metals and mining. Yeah, so we're starting to see like that group also pick up, like you pointed out. 2 days on above average volume. Friday, nice move right into $50, up 7%. And then today on above average move, up 1.88%, 1.2%, or 2%. Above the 200-day moving average now. So now we want to like focus on what in the metal mining and ores group is showing the best relative strength. And at least from a setup perspective, I've noticed the lithium stocks, but I know silver had a nice move today, up 2.9%. Rejected right at that 200-day moving average so far, but we'll see if we can clear that. So that is a group that we want to be focused on as well. You also pointed out BP, a little pullback to the 8-day EMA. BP just trades so weird. Like whenever I see a chart that looks like this, where it like has a bunch of gaps overnight, I just tend to trade something else. Like this gives me more confidence. Like the more oil and gas stocks setting up, the more oil and gas stocks showing relative strength, the better confidence I have in the group. But I would rather focus on a stock with really tight price action that doesn't have that gap up and gap down stuff to actually like put my money in the market and take that risk, if that makes sense. Dollar General, it's a stock that's holding up fine, but to me it's more of a stock, kind of like insurance companies, where if they're the group, like if that retail discount stores are the ones that are hitting new all-time highs or relative strength new highs, it's more of a signal that this market environment isn't one that is super profitable with my swing trading style. So it's more of a signal that just says, Nick, go into cash, or Nick, take a break, don't have too much exposure on. And we are seeing like a lot of insurance companies hitting relative strength new highs, a lot of banks hitting relative strength new highs. Not super fun stocks to trade, and if you're using like a 5% stop loss, they're slow enough moving where you're not likely to get a nice like 10% burst of price action where you can sell into strength and then take that capital, put it into another stock, and quickly turn your edge over because you still need to compress your expectations because they don't move very fast. So you have to have like a 5% stop, 10% kind of goal to have that asymmetrical risk reward. And it could take a bank stock like weeks to get up to a 10% gain, where if you do trade a couple growth stocks in the right timing, they have that ability to make those quick moves and then for you to turn over your edge. So it's just more of a signal to my system saying like, let's scale back position sizing, let's scale back the number of trades, let's not try to make a ton of money in this environment. This is more of an environment to survive, to focus on. Something I've been spending a ton of time on recently is like working on a full Microsoft Excel like trading journal that keeps all your trading stats, keeps your account balance stats, and I hope to have that done by the end of the year with all the macros and everything that I'll release. But that's where I've been spending most of my time as stocks like this are leading, or not leading the market, but are holding up the best in the market. Dots, you want to see LNTH. This is one of those stocks that was so frustrating to watch go up because it never really gave you a low risk entry point. The only day to really trade this was the day after its HVC, the high volume close move. So the first time it really like shocked on earnings, or I guess like mega shocked on earnings, was in February. Where they were up, 257% earnings per share growth, 38% sales growth. The stock was up 39% on 1,100% the average daily volume. So huge shift in supply and demand with a nice closing range, closed at 63% the daily range. And then we also closed right on $40, like $40.15. So the next day, as it pulled back into the HVC, the high volume close area of $40.15, you get a nice round number of $40 as a potential support area. This was really the day to get in. And it moved up 16% super quick that day and then just kind of wedged higher. And from then on, it always had these like random distribution days where it would cut through the 8 and 21 EMA really quickly and then just pop right back. And I never found a way to get in this. I never traded the stock. It was on my watch list almost every day, or my focus list almost every day, but just never found the right entry point on it. So am I super sad that it's rolling over and losing the 200 day? I'm sad in a sense that this is more of a reason to be cautious about the market, but I wasn't able to squeeze any money out of this stock that doubled in this year just because of the way it traded. No respect to the moving averages, not much respect for round numbers, anything like that. Traded super weird. So this kind of is a good example of just like, you need to find the right market environment for your strategy, but also the right stocks that have the characteristics that will do well with your strategy. So someone could trade this with a strategy where like they buy off of the moving averages, and they would have done really well, like buying off the 21 EMA, the 50-day moving average, relatively in here. And maybe that strategy works better with this name, but maybe that strategy does not work better with the oil and gas names. I'm just throwing out an example, but you want to pair the stock characteristics with the market environment with your strategy before you like get aggressive with trading. And right now we're just not seeing many like low risk setups in a market that's not news or event driven, where the indexes are above key moving averages and we have liquidity coming into the market. So instead of trying to make a killing right now, it's best to spend some time on trading education and read the best trading books, watch some of the best trading interviews, and just go back through your trades in 2022 and see what you could have done better or avoided and done better. But with this, rallied up to that 50-day for the second time, reversed, and earnings per share over 1,000% growth, sales 134%, after-tax profit margins up 30% year over year. It's not the earnings that matter, it's the reaction to earnings. And this is telling you a story where there's no additional buying support coming in. You would expect, like, if this was such a good deal of a stock, it would have been supported at like $67. It would have been supported at the 200-day at 62, but it cut right through that, didn't even attempt to rally up as the market rallied, and then pushed lower. So, I mean, this could be working on just like the left side of its base, but that base is likely going to take a long time to bottom, to form the right side before we can get some low risk entry points to the upside on this. So I don't trade any stocks like under the 50-day, definitely not under the 200-day, unless I'm trading on the short side. All right, Brian, let's see, TTWO, Grand Theft Auto game, got killed in guidance, video games holding in general. No, I don't want to be involved in this at all. So just going back to exactly what I said, don't want to be involved in any stocks under declining 50 days, under declining 200-day moving averages, or under those two moving averages for that matter. Could this bounce back? It absolutely could, and it will at some point. It'll have a bounce, but I don't know if the bounce is going to happen tomorrow and then it's going to rally and I can get a lower risk, like a stop loss in there, or if it's going to continue to sell off for a little bit and then bounce. And if I know one thing about my own trading is I am horrible at trying to time market bounces or oversold bounces in individual stocks. So knowing that and looking at my trading stats back a couple years ago when I was trading setups like this, I was just like, wow, Nick, you lose 70% of the time when you try this type of setup. How about we stop trying to do that and focus on more high win rate setups? And doing that has helped my consistency and helped my account balance. So there's going to be people that nail the bottom on a sell-off like this, but are they going to be able to do that consistently? Because again, trading is not about just one trade and making money on one trade. It's about making money consistently over 1 month, 3 months, 6 months, 12 months, 5 years, 10 years. And if you don't have a system or a strategy that prioritizes risk management and really emphasizes managing like where your risk or where your stop loss is and your entry tactics, more likely than not, you're going to be in more like of a boom and bust system, if not just like a lower trending equity curve or account balance. And I don't know. For me, I'm just being straight up with you. I am terrible at trading oversold bounces. Also was always super stressful because you buy because it's cheap. This is a Minervini quote. You buy because it's cheap. So when it gets cheaper, it just gives you another reason to buy. So if you're just continuing to add because it gets cheaper and cheaper and cheaper, well, you're sizing up into a stock that the market's telling you you're wrong for getting in. And there's always an opportunity that you're in a stock like Upstart as it broke down, and now you're averaging down at 200, at 150, at 100, at 75, at 50, at 25, at 14 now. So can you make money on it? Sure. There's 1,000 ways to make money in the market, but what I want to do is look for the strategies that are most consistent and that are going to have the lowest amount of drawdowns in my account, or the shallowest drawdowns in my account, if that makes sense. All right. We'll leave this up for another 2 minutes. Any other questions, comments, chart requests? Otherwise, I have a couple other names I'm just generally watching that I can bring up, but ACGL, this is one of those insurance companies that had a nice pop on earnings, relative strength new highs, price new highs. Again, more of the market environment versus stocks that I want to trade. ALB had a really nice move today, one that I was watching, or one that was on my watch list, going to come into today and focus on, but other things came up, more important things. ANET had earnings last week, 69% growth, nice move up, 2 quiet days pulling back. Ideally for this setup, we do pull back to the 8-day EMA around 125 or 126 and then see how that holds. APA, oil and gas name, right near the highs. A little pullback there. Talked about Arch. Let's see. Talked about CAR. CNQ, Canada oil and gas stock. Nice kind of support at $60. Tightening price action just gives the general index, or the general group, more to work with. HLX, actually, I should have had this on the watch list. Nice move from 4 to 7, about 7 trading days of really tight price action above the rising 8-day EMA. We'll see how this holds $7 tomorrow. And MEDP, another one that I had traded before, cut it for, well, I sold a little bit in strength because it wasn't moving too much, and then we had the Fed day, so I wanted to get off a 20% exposure, get it down to like a 10% position size, and then that next day got stopped out, so this was like a 1% loss, something like that. Not doing anything like terribly wrong, still above a 21 EMA, but has some work to do. Interactive brokers. Robinhood was actually holding up really well until today's action. Man, those crypto stocks got burned hard. SI down 22.6%. Coinbase was down, 11%, right near new lows. I guess the low was really extended here. So still about 20% off the lows, but it looks like it from this chart just because how much it's gotten beaten up. What was Mara down? Only 5%. That's pretty strong, to be honest. But yeah, those crypto stocks got hit pretty hard. All right, I think we'll end it there. I don't see any more comments, so thank you guys for showing up. Make sure you hit the like button so YouTube pushes this out to more traders after the live stream is over. Make sure you subscribe. I do other trading related videos throughout the week. I'm going to be doing a lot more short form content too, so as I put out shorts that you enjoy, let me know that you enjoy that type of content. I'm going to be, over these next 3 weeks, really experimenting to see what type of short form content does the best. Is it like a daily recap of my own trading in the indexes? Is it like setups that I'm watching that I could just throw out on a 60-second clip? Stuff like that. So if you have any feedback about the shorts that I'm going to be posting throughout the week, leave them as comments. I read every single comment that comes in the channel. So